Welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy, back with you after a couple-week break, so I should be good and rested to get after these markets. If you want to follow me or see what I have to say, it's at Scott the Cow Guy. That's Twitter. That's the best way to do it. But I really enjoy coming to you, and it's been a little bit too long, actually, so I might be a little rusty, so give me a few seconds. But let's see what's happening in these markets, because that's going to be the most important thing. You don't really care about what I have to say, but let's take a look at what's going on in corn. Got that March contract now off 7 1/4 cents at 5.99 still slipping, or 3 cents off the lows, but still that's a weak one. May is off 6 3/4 cents at 6.01, and again that's about 3 cents off the lows there too. How about soybeans? This one, please turn your heads. Not doing too well. March off 26.5 cents, 13.83 3/4, which is about 5 cents off the lows in March. May is at 13.92 1/4. That's down 26.5 cents. So both of those contracts, soybeans across the board, taking it on the chin here. How about wheat? Let's see what's going on there. This one is a little bit better, I think, in Chicago. Chicago wheat, we've got that March contract. That's up 8.5 cents at 7.67 even. That's a half cent off the high, so we should probably stall here for a second. May's up 7 3/4 cents at 7.68 1/4. Moving right along to Kansas City. Kansas City's up as well. We've got that March contract up 4 1/4 cents at 7.79 1/4. Half cent off the highs there. May's up 2 3/4 cents at 7.78 3/4. So not a bad day so far in wheat in those two contracts. Let's see what's happening over in Minneapolis. Trying to eke out a gain here. Definitely eking out gains in the deferreds. Both SEP and December are up 6 and 5 cents respectively. But March in the front is up 1 1/4 at 9.24 that's about a penny and a quarter off the highs though. May is up 1 1/4 cents as well at 9.21 Let's take a quick peek at what's happening at cotton. We'll get to our guest analyst. Cotton's quiet. Look at that. March up 3 ticks at 115.15 is last. All right, there you go. We got through cotton. Let's bring back in Todd Horowitz from Bubba Trading. Todd's with us in Las Vegas, I believe. Good morning, Todd. Now, we don't have the video up, but we can all imagine the Renoir and Monets that hang behind you. What do you think about the markets here? Obviously, soybeans taking it on the chin.
You know, Scott, I think that you're just kind of seeing a very orderly sell-off pretty much across the board. I mean, you know, equity, just about everything's selling off right now, which is pretty consistent with, you know, higher interest rates that we're getting with the, you know, talk of Goldman Sachs and 4 interest rate hikes this year. And, you know, we've had a nice rally in grains. I mean, a little bit of a pullback's never something that I get, you know, too nervous about. I mean, you know, wheat came right off support, which it was lower this morning, and soybeans, you know, are, you know, coming back a little bit, but they had a great week last week. So, you know, a little bit of a pullback is not a shock. And the corn continues to hover right around $6, and looks like it's getting ready just to make the next move higher. So, I mean, I think I'm pretty favorable for the grain markets overall.
Yeah, you know, as you speak, I'm thinking to myself when we were leaving, or at least when I was going away on break, you know, we were talking about 6, 8, and 13, and I got to be 6, 8, and 14, right? So you're right. I think that the soybeans have done pretty well there. And again, with the sell-off that we're seeing at other places, maybe we're going to try to take a little bit off the board here. So that doesn't seem too outrageous for me. It is a big move, though. 25 cents is still something not to be sneezed at. But I also would need to remind people, the higher you go, the less of a percentage move it is for some of these contracts. So keep that in mind as well. But yes, 25 cents still stings. We're going to keep an eye on it for everybody out there. But right now, we're going to go away, pay some bills. We're going to come right back after these messages. Welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. I haven't been able to do this for a few weeks, have I? That's a great segue into that cattle market. Why don't we take a look at live cattle and see what's happening over there with those prices today? That live cattle market is a little easier to. Let's talk about February off 82 cents, 136.50. That's 20 cents off the lows. So let's keep an eye on that. April's off $1.10 at 140.95, which is about 50 cents off the low. So we're going to keep an eye on that one. It's kind of slip sliding away would be the song I'd be thinking about if I was looking at that contract. How about feeders? We've got that March contract down 85 cents at 165.82. And then we've got the April contract off $1 at 169.87. So much the same as we have in the live cattle. Feeders are following. Let's take a look at what's happening in lean hogs after yesterday's sell-off. We've got that Fed market off $1.12 at 78.52. That's still close to the low of the day there. April's off 262 at 84.72. Again, only about 20 cents off the lows there in April. So all of these contracts, when it comes to the livestock, still kind of lean into the sell side here. Let's bring back in Todd Horowitz from Bubba Trading. Todd, what do you think about livestock? What are they telling you right now?
I think, look, I think livestock is at risk, but I think that looks pretty good. I mean, we're really not going anywhere. We're kind of, sitting there in quicksand, going up a little bit, going down a little bit, but basically flat. If you look at what we call a consolidation pattern, I mean, they're really just going sideways. They have done so for a while here. And I think a lot depends on, this inflation and what happens with gas prices, because, of course, the cost of beef is getting up there again. And I think that, the overall economy, as you and I have agreed many times, is not in very good shape. But so far, we're holding it price-wise pretty well. So, I mean, I wouldn't be concerned. I'm actually favorable, and I'm actually long all three. So, feeders, fats, and hogs. Yeah. I think they all look pretty good. So
I just brought up, you're exactly right. We have CPI coming on Wednesday, I believe, yeah. And that's going to be a next inflation read. That's going to be something we're going to talk about all year. There's going to be no way around it. And a big part of that inflation component, like you said, we got to keep an eye on energies, because energy is what you need to have a thriving economy, cheap energy. And if you've got things moving around and it's expensive to get them from here to there and then expensive to make them, and energy is a part of that product, until you get a hold of your energy situation, at least the price inflation when it comes to energies, you're not going to really get a hold of your inflation scenario. So I think that we have to watch that crude oil contract. I brought it up. We're off about 40 cents right now, but I think that's going to be something we're going to watch all year long, because if some of these analysts are right and we get that thing up around $100, that's going to still be a big problem for inflation. So that's it from me. Thank you very much. That's Todd Horowitz from Bubba Trading. He's in Las Vegas. We're in Nashville. I'm going to throw this one back over to Janet.